Let's move over right now. We're going to go to our browser and type in ord-oracle.com. Every Tuesday and Thursday, we are joined by Tim Ord of the Ord Oracle. Check out his website. You get his newsletter, his book as well. You can go to TFNN.com. Go over to the services tab. 2 fantastic webinars from him. That's the Secret Science of Market Tops and 6 secret ratios every trader should know. It's just been an interesting past couple of weeks, and even though there's not a ton of action, I feel like the volume's kind of low. And if I remember correctly, Tim and I were kind of speaking about an event where that occurred. Tim, how are you doing?
Okay, then let's begin. So we keep showing this chart. This chart looks at the bigger trend. The bottom window is the 10-day or actually 100-day trend. Anything around 1, we're at 1 right now, and it's a bearish situation. I put it that way. All the red lines going across this chart are times when the 100-day trend is down 1 or lower. So it was kind of a bearish sign back. It looks like about January, and turned out to be correct. So that's the bigger trend. Look at the smaller trend. This 10-day trend on top here is at 1. It needs up to around 1.2. So that's not in bullish configuration yet. So that anything around 1.2 and higher suggests panic in the market. Panic only comes at bottom. We actually are 1 right now. If you look over here, and that's neutral. 5-day trend, kind of similar situation. It's 101. The 2-day trend is 0.79. That's kind of leans bearish. The 3-day trend is 0.77. That leans a little bit bearish. So we really don't have any panic in the market yet to really establish an immediate term bottom. So, but there's some promising signs here going forward. That this is one of them. This is the advanced decline with the 5-day average, and it gets down below 0.7 and rallies to 0.3 in 21 days or less. That's a bullish sign. And I went back, this looks like about 2021, and I marked the times in this shaded pink area where that ratio did go below 0.7 and rally to 3 or higher within 21 days. And if you notice, they kind of cluster here. Yeah. This is the last 2022 bottom. And they all kind of came at the same level. Here's the bottom here. It turned out to be correct. We had one back in January, and I think the market would have been fine if the tariffs weren't announced. And the tariffs came out, and the market plunged. And now we got another one going along. So I'm thinking, even though January didn't anticipate Trump doing the tariffs thing, which I think caused a decline, we're probably in a bottoming process. And sometimes the market can go like back in like 2022, yep. Kind of flip sideways here. And I think we're making a bottom, but I think we're going to test the last low, which is last Monday. Mm-hmm. But this is a bullish sign. Went from 0.7 all the way up to, we're still at 4.69 right now. Anything above 3 is bullish. Yep, I'll hold.
Yeah, please. Folks, stay right there. We'll be right back with Tim Ord after the break. Welcome back, everybody. Jacob Shoup, watching Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle. Tim, before into the break, we're taking a look at some movement in the trend, at least. Some potential bottoming patterns here.
Yep. That's what I'm thinking is going to happen here. I think we're in a process of making a bottom. But, if you look back at 2022, you went sideways, most of the year. But, this built a lot of energy. The trend got way up there. And, this is the first sign, especially when this reading got up around 4.5. So it's definitely some buying pressure there. So let's look out where we may go. This is, we're just blowing this part up right here.
Yeah.
Which is that. All right. So anyhow, we got a buy signal on this day. And if you notice how high this volume is compared to what it was back here, this is probably a selling climax. Volume, tripled compared to the average daily volume going back to February this year, February. So that's exhaustion to the downside. We did have a sign of strength, which is basically this day right here. That's a sign of strength. He came off the bottom. You want to see a selling climax right after it. You want to see a buying I don't know, this turned out to be a buying climax. And so buying climax is the bottom support and the top is resistance. And I think that's where we're going. If you look at the trend today, we're 1.22. And quite a bit of the day today we had downtick readings. So I'm thinking we're going to take a shot at this high right here. And I bet it's going to be resistance. We're not going to get through it because the 10-day, 21-day, 63-day trends are not up to panic levels. Suggest this rally could keep going. So we're going to probably back off. And we'll probably hit that zone, go back down and test this low right here. This low right here, which is basically the highest volume day of over the last several months, looks like.
Right.
So we're going to probably test that. And to get through that low, volume's going to need to equal or higher than 250 billion shares, because that's approximately where that volume is.
Yeah.
And that's probably not going to happen.
Yeah, right.
So anyhow, we're going to go down there and test. I'm probably going to end up with a bicycle somewhere around this 480 area.
You know, and on that point, right? Like, and I know we're on a holiday, we're short week and everything like that, but I mean, the volume has been paltry the past few. I mean, today it's looking to be even less than it was yesterday.
Yep. Yeah. It's going to get lighter as we go into, probably Thursday.
Yeah, sure.
And probably Thursday, we're going to test with last Wednesday's high.
I'm thinking so. Yeah.
Yeah. If you go, if you go up into a holiday, that's usually a bearish sign because volume drops off. And if you hit a high during the holidays and volume's light, you're going to come back next week. And if you're going down into a holiday, that's actually bullish because volume's going to drop down as you get into the holiday. And light volume highs, tests of previous highs and lighter volume is bearish. Tests of previous lows on a lighter volume is bullish.
Sure.
So I'm thinking we're going to be, but that's a heck of a move. We're getting real quiet. This is quiet before the storm, I always say.
Yeah.
Because when it's quiet, you got a storm coming. When it's really high volatility, you're going to change back to low volatility. But we're probably going to test this high right up in this range here to give or take, 550. Probably can't get through it. We're probably going to go back down to 580. And you go back to this chart, if this thing goes back down to 0.3 again, and we come off this next high with another sign of strength again, then we probably got a doable bottom for a while. We'll see how that happens. But I think we're probably looking at the lows. I know this chart's getting really messy with all these red lines, but I'm thinking this low of 480 is probably pretty close bottom of the year.
Okay.
Is how I'm starting to look at it, because you had a selling climax right after it. You had to become a buying climax. And those are the type of things you need. If the market didn't have a buying climax coming off this last low, then that would set the tone for more downside. But that didn't happen. So, and that's, we got a good 10% drop, because this day right here, that's the day we actually traded, was 9.52%. So this is about 11% drop to get back down to 480. Didn't do the math, but it's going to be quite a drop. Scare everybody. And you want that trend to get up to around 1.2 or higher on that pullback. So hope is really scary, because scary is good. Panic is good. So, well, we'll get that or not. We'll have to wait and see. But I bet most likely we will. And there'll be news about something.
Sure.
It always is. So let's get along to the gold market.
Absolutely.
Here's a bigger trend. Keep showing this. This is the chart goes back to 2010. Bottom window is GDX cumulative up down volume. Next window higher is a monthly GDX advanced decline cumulative. Gave a buy signal March of 2024, still on a buy signal. Higher highs on this indicator showing the internals are getting stronger. Uptrend is intact. It doesn't try to pick out all the wiggles in the market, but this trend is going. So I'm still actually thinking we sold out of our long position Friday, and because I think we're going to get a decent pullback. But the bigger trend, just saying, you want to buy that pullback. Here's internal strength of the market. This is the 50-day average of the up-down volume. I thought we might go sideways here, kind of just for this indicator to go sideways, around the plus 10 area. I think that's probably what's going to happen. But here's the reason why we sold. Whoops, let's go back here one more. This is the reason why I sold our GDX position. This is GDX going back to 2016. It's kind of a rare signal, and it's a monthly chart. And every time you get, actually it's 50% above the upper Bollinger Band. This time around, we got 80% above the upper Bollinger Band. The market consolidates. And that's the reason why we got out last Friday. And it's still up there pretty good. But this is the reason why it's a pretty, even though it's a kind of a low-tech indicator, it works really well. And so we're looking for a pullback to support around 39, which is basically the previous highs. So if you look at the smaller, so we haven't shorted, we're just going to get out. I don't know the trades, but here's the shorter pattern. This is 3 drives at top pattern. You have a high here, you got another high here, and you get a high here. But what's important, how to identify this pattern, is on the pullback of the second high. It has to increase in volume. It has to be at least 61.8% retracement. If it meets those criteria, which it did, there's the volume, and actually we kind of had a selling climax here on this day right here because the volume just skyrocketed up. And the next day was a low, and then now you had a sign of strength up to new highs, but this is the third top. So you got to remember, way above the upper Bollinger Band. So this 3 drives to top, 3 drives to top pattern predict the market will pull back to where the pattern began. Well, the pattern began around 39, which is basically support. So the market, if you can read all the indicators, it works out pretty well. But that 39 is going to be a great buy because all of the monthly charts on the bigger time frames are up. So this is just a shakeout and an uptrend. Matter of fact, the book says 3 drives to the top patterns are usually not long-term topping patterns. They're basically a timeout and an uptrend. So I think that's what's happening here.
Fantastic. Do you have any other charts, or are we ending on the GDX?
Say what?
Do you have any other charts?
Nope, I can hang on for another couple of minutes if you want me to.
No, that's fine. We'll see you Thursday. It is amazing, Tim. You've been calling this GDX for so long, and we have paid in droves. Thank you. We'll see you Thursday, Tim.